Hello and welcome. I hope that you are having a fantastic day. Today we're going to talk about cryptocurrency news. Is Europe, Ukraine, and Germany specifically crypto friendly? Ethereum and LiteCoin are approaching a golden cross, and we have 15 crypto tax tips. So let's get right into it. Can we get 99 likes on this video? If you could help us out by clicking the like button, we would really appreciate it. Also, I'm not a financial advisor. This is not financial advice. This is my opinion. Do your own research, and we want to help you do your own research. So in the YouTube comments, we're going to provide links to all of the articles that we take a look at. So first up, new progressive Ukraine crypto mining policy. So the Ukrainian government is coming out with a new crypto mining policy. Ukraine is slowly but surely trying to become the epicenter of the global cryptocurrency revolution. The newly announced Ukraine crypto regulations have been designed to promote both cryptocurrency and the blockchain industry in the country. The Ukraine crypto mining policy will help the European nation become the next hip crypto destination in the world. You know, I never thought of Ukraine as a hip place to go, so we'll see how that actually turns out for them. But I think it's great news to hear governments around the world that are embracing cryptocurrency and trying to make it easier for cryptocurrency-related businesses to thrive. And that's what they're doing in Ukraine. They're trying to make it easier for cryptocurrency businesses to thrive. Germany is doing the same thing. They already have 40 applications from a variety of German banks, and those banks want to custody Bitcoin, Ethereum, and Ripple. And so already 40 licensed banks have applied in Germany to obtain a license for custody and other services related to cryptocurrencies such as Bitcoin, Ethereum, and Ripple. According to German government sources, the clear regulation of cryptocurrency is expected to become a competitive advantage in Europe. And so Europe is taking aggressive steps to try and become the crypto capital of the world. And one of the things that they've done is they've made it possible for just a regular bank in Germany to create a cryptocurrency custody service. And so if you have a bank account and you're a German citizen, or you have a bank account at a German bank, in the near future, you would be able to deposit cryptocurrency. You would be able to deposit, the German money. I hate to say it. I can't think of what kind of money Germany has. It would be the European pound, the European dollar. But you would be able to deposit various types of assets, including cryptocurrency, into your German bank account. And so that's actually pretty exciting. It makes it easy for people to own and trade using cryptocurrency in Germany. With other news in the United States, we see that decentralized networks, a powerful phenomenon, is why the SEC commissioner proposes time-limited grace period for tokens. So at this point, this is just a proposal. It has not become law. So it'll be interesting to see how this turns out. Hopefully this does become law, because it'll be great for cryptocurrencies. U.S. Securities and Exchange Commissioner Hester Pierce has formally proposed a grace period of 3 years for tokens. Project developers would be exempt from federal securities law during that time, provided that they met certain conditions. After that, they must determine whether their token transactions involve the offer or sale of a security. So the reason why what Hester Pierce is proposing is so great for the cryptocurrency industry is the Securities and Exchange Commission came after a whole bunch of different, well, I shouldn't say a whole bunch. They came after a handful of cryptocurrency companies because they determined that those companies were securities, but they had not been following the securities. They hadn't filed with the SEC, and they hadn't been following the SEC regulations. And so this puts kind of a hold on it for 3 years and gives those companies an opportunity to run an ICO, an initial coin offering without having to be regulated by the SEC, and it gives them 3 years to become decentralized enough that they would never become considered a security, similar to what the SEC rulings on Bitcoin and Ethereum are. They actually, with Ethereum in particular, they specifically said that at one point Ethereum was a security, but now Ethereum is not a security because it became decentralized enough. So initially, Ethereum raised money in order to start the project. And then once they had the money to start the project and they got Ethereum off the ground, then the organization that started Ethereum gave up enough of the control and decentralized Ethereum to a large enough degree that they no longer considered it a security. And so decentralization with a cryptocurrency is a big part of the key for the SEC to not consider it a security and to not enforce the SEC regulations upon that cryptocurrency. In more news about Ethereum, Ethereum is on the verge of closing in on a golden cross. Now, if you're not familiar with it, a golden cross is when two moving averages cross. And so in this particular example, this blue line here is a 200-day moving, simple moving average. And the orange line here is the 50-day simple moving average. And you can see that these two moving averages are coming together and they're about to cross. And so this chart is the Ethereum chart, and then this next chart is the LiteCoin chart. And you can see, again, both of them are on the verge of crossing. And so when you get a golden cross, that tends to indicate that that particular asset is in a bullish market, that it has a tendency to go up until you've rebroken that golden cross and gone into what's called a death cross, which is the opposite side of a golden cross. It's the side of a golden cross where the asset is actually going down instead of increasing in price. And so this is a very bullish sign for Ethereum and LiteCoin, and so it does portray good things in the future. Why some traders believe Ethereum will see the biggest upsurge in the 2020 bull market. So the Ethereum price is up 96% in the last 53 days, from $116 to $228. Traders foresee Ethereum to be one of the top performers in 2020 if the current upsurge turns into a full-blown rally. Throughout the past month, Ethereum has front-run the market. It's been one of the leaders in terms of growth. Before Bitcoin price started its run to 10,000, Ethereum continued to demonstrate a vertical rally, with every dip being bought at a rapid rate. So, sounds like good news. We'll see how it plays out. And the last article that we're going to look at is a guide to cryptocurrency tax rules. So these are a number of tax tips or tax lessons, depending on how you want to look at it. The first thing is, when it comes to the IRS in the United States, cryptocurrency is considered a property, and it's treated that way in many other countries when it comes to taxation. So if you're not a U.S. citizen, you'll want to find out what the regulations are for where you live. Bitcoin and its competitors look a lot like money. They're a store of value and a means of exchange, but the IRS has decreed that these assets are not currency and not securities either. They are property, more like a shopping mall than like a $100 bill. So the second tip was, sales are not the only form of a taxable transaction. When they're sold for cash, traded for another crypto, or used to buy something, you've incurred a taxable event with cryptocurrency. Tax codes, wash sale rules do not apply. And so when it comes to selling cryptocurrency, the typical tax code wash sales do not apply. Exchanges squeal. So if you're using an exchange to buy and sell cryptocurrencies, such as Binance, Coinbase, Gemini, or one of the others, those exchanges are turning over your information to the IRS and to other government entities around the world. And so you can pretty well be confident that the IRS already knows what you've done in terms of cryptocurrency. Forks can create ordinary income. So if you own a cryptocurrency that had any kind of a hard fork where you ended up with two coins, two different coins from one single coin, that can create a form of income. Airdrops also can create ordinary income. Now this one I don't like, because somebody can airdrop you cryptocurrency just because they're sending cryptocurrency out to all the Ethereum addresses, or a select group of Ethereum addresses, or some other reason. You could suddenly get an airdrop of cryptocurrency and you've incurred a taxable event, and you may have a tax liability as a result. Mining creates ordinary income. And so if you're mining cryptocurrency, your mining efforts are treated as income. Staking gives rise to ordinary income. And so if you have EOS or one of the other cryptocurrencies that allows staking, you're generating income. Gifts of cryptocurrency to charity get treated like gifts of stock up to a certain point. And so if you're giving your cryptocurrency to a charity, you want to understand the limits of what you can and cannot deduct. Gifts of cryptocurrency to friends and relatives are treated like gifts of stock. So again, if you're gifting cryptocurrency to either friends or relatives or other people, maybe you're gifting it to enemies, I don't know. Anyway, you want to understand the tax liabilities and consequences in that situation. Like-kind tax postponement doesn't work. So with the like-kind rule, people aim to treat the exchange of one crypto for another as a non-taxable event, postponing tax until the sale of the new coin. That doesn't work. Bitcoin futures are Section 1256 contracts. And so if you're trading in Bitcoin futures, then for tax purposes, you need to understand the tax regulations concerning 1256 contracts. Crypto is probably subject to the straddle rule. And so you could, the rule forbids you to deduct the loss on closing a position, stock option or whatever, while you maintain an open position that runs in the opposite direction. So if you're doing margin trading and or some other similar situation where you've gone short on a cryptocurrency and gone long on that cryptocurrency at the same time, either using margin trading, for futures trading, or something else, or even if you're doing a long trade on one exchange and a short trade on a different exchange, you may have incurred what's called a straddle, and you need to understand how that affects your tax situation. Offshore crypto is probably not subject to FBAR and FATCA reporting, but notice the word probably here. I've used a service called Zen Ledger, and they have recommended, at least on my 2018 taxes, that I filled out the FBAR, and so I did so. And the FBAR is for foreign bank accounts, and they considered me depositing a certain amount of crypto in Binance as having a foreign bank account. And so they say probably not subject, but they were not 100% positive. And because of the penalties for not filing an FBAR, you're far better off if you file it and don't need it than if the other is true. If you don't file it and you actually needed it, the penalties can be severe, up to $10,000 per situation. And so that can get quite expensive very quickly. And you just want to make sure that you have met those requirements. And then the last one, identifying lots work as it does with securities. So say you buy 5 Bitcoins at 6,000, and then you buy 5 more Bitcoins when it's priced at 8,000. Now you sell one coin for 9,000. Was it one of the earlier ones creating a $3,000 gain, or one of the late ones creating a $2,000 gain? And so This is why you need to keep really good records, and probably, depending on the volume and your particular situation, it may be advisable to use a service to help you with your cryptocurrency tax obligations. So a service like Zen Ledger or something else. If you're not familiar with any of those kinds of services, we have a video that we created on Zen Ledger, and the link to the video is in the YouTube description below. So that's our video for today. I hope that you have a fantastic day, and let us know how we can be of service to you. Do you have any questions? Did we cover something that you want me to go into a little more detail on? Or do you disagree with what we said? You know things I don't know. I know things you don't know. And when we share what we know with each other, we're both going to grow smarter together. So I want to grow smarter with you. I hope that you'll share your polite disagreements in the comments. In the meantime, I hope that you'll like, subscribe, and hodl, and have a fantastic day.